Garret, what are you watching today?
So I am looking at Qualcomm, and this was the company that I talked about yesterday with Midday Momentum. It's effectively my top semiconductor pick moving forward. Now, obviously, we have Intel within the Money Morning Live portfolio. The reason is that Intel is a range-bound tech company, and I like the ability to just generate income off of it. Qualcomm, however, looks like it's going to be a momentum stock for 5G. So there's a lot of opportunity here moving forward. I think that this is going to be the top semiconductor company moving forward. They have significant, just think about the exponential quality of this company. The 81 Mercedes that I would love to purchase one day has 0 sensors in it, but the 2025 Mercedes EV will have hundreds of sensors in it. So semiconductors, looking at Qualcomm, different ways to trade it. You can sell puts on it. It's a little boring. What I'm actually going to be looking to do instead is to be going further out into the market as far as January, like effectively June 17th, or possibly even further into January 2023, and buying a deep in the money call, potentially down around $140, and paying upwards of $40 for that bid. The opportunity here is that I'm going to be able to take possession of 100 shares of the stock for significantly less than buying the stock at $16,500 for 100 shares, and then I'll turn around and just start to sell calls at the higher levels, and that's known as a poor man's covered call.
All right, so you're looking at a poor man's cover call. You're looking at buying really, really deep in the money calls. You said it's dated to June?
So, I mean, I could potentially do June, but I might even go further out. I mean, this is one of those trades where I have to really kind of dig deeper into the numbers themselves, but I might go out to, and this is one of the problems again with my lovely experiences that I do have with TD Ameritrade, just trying to get the in the money numbers. 1 second. I have it. I've got it. Well, I know how it works.
I like a good poor man's cover call, Garret. It's that I haven't heard you talk about one of these in a long time, and it's really interesting because I guess it's called a poor man's cover call because it essentially replicates as if you're buying the stock and then just selling shares against it, selling calls against it to collect some premium.
Correct. So in this case, if you were to go all the way out to January 20th, 2023, and you bought a $135 in the money call, it's going to cost roughly $42.90. So that's $4,295 instead of laying down $16,500 today. And then at that point, I start to go up the ladder at sooner dates and pick expiration dates in, say, May or June or July, and start to sell calls against it. In the event that the stock hits that particular level, I can always take possession of the stock. But I'm going to just continue to generate income off of a company that I truly do believe will hit 200 in the next year.